What's up, YouTube? I'm Rob.
And this is Nick.
And we are Coffee and Crypto. We are here to give you a market update. But before we jump into it, please do us a favor and hit the like button on this video and give us a subscribe to this channel, as it really helps us out in our growth in the initial stages here, because we are in it for the long haul to bring you market analysis, education, and all things crypto related. So Nick, why don't you start us off? We have Bitcoin just teetering over $30,000. So let's jump into it.
Yeah, kind of got slapped in the face here the last week. I know in the last market update video, I was feeling kind of bullish. Now I've kind of changed my sentiment a little bit. The market's not really behaving like I thought it was, and hearing a lot of people continuing to talk about the Fed tightening and money being pulled out of the market and liquidity being reduced, it's got me a little bit scared. Should I still try to be a contrarian? And
should panic sell?
Should I? I'm not going to panic sell, especially after some of my alts are down 90% from the peak last year. But anyways, we're looking at Bitcoin right now, just over 30,000, like Rob just said. We're forming what looks to be a bear flag. What
is a bear flag?
It's kind of one of those chart patterns. You know, when you first become an investor or trader, you just do a Google search for chart patterns. At least I did. That's like kind of one of the first patterns you see. You see like the head and shoulders. You see like the double bottom.
Right, but if you could point out on the chart where a bear flag is, so our viewers can recognize it.
Yeah, I can definitely do that. It might be easier if I describe a bull flag. Because a bear flag is essentially a bull flag, but in reverse. So I would consider this you get like a large impulse up and then consolidation after that impulse move. It looks like a flag. It looks like a flagpole and then a flag. So if you flip that in reverse, we can see that right here. So you got the flagpole, it's upside down, and then we're kind of consolidating at this level. The bulls and the bears are fighting right now, is essentially what it is. There's consolidation happening. There's some confusion in the market. People are wondering, is all of the bad news already priced in? Are we going to break these levels here that have been kind of, let me zoom out just a little bit. Like, this is kind of I've heard a lot of people call this the line in the sand, like recently. If we break this level, it's got so many touch points. There's a lot of area right here that this level is an area of interest in the market. It's where a lot of buyers and sellers are coming in to either sell or buy in and accumulate. However, if these lows are broken, just the technical part of me would want to say this bear flag is going to have continuation about the same length of the bear flag or the bear flag pole. So we're looking at 38,000. The pole is down to around 31. So we're looking at a $7,000 move down to the low 20s. Maybe even capitulating down to the all-time high of 2017, around 20,000. So we're still kind of watching and waiting at the moment. Things are not looking good, but we're just kind of watching and waiting to see where the market is going to take us. What do you think, Rob?
A serious question. If a bull and a bear were to actually fight in real life, who do you think would win?
I would say the bull would win, just because more power, more like faster acting.
That's what I don't know. I think a bear would win. Those things are fast and mobile. They can climb up trees. They can swim. They have claws. They're scary animals.
That's true. Like a bull is just kind of like a cow, right? A male cow. He could kind of kick the bear, but he doesn't really have teeth to kind of gnash into the bear. So
I think, bear can freaking jump on your back. A bull will just run you over, essentially.
You got a good point there, Rob.
Anyway, we're going to jump into it. Where do I see us going? Well, now that you've identified the bear flag, that makes perfect sense because it does look like an upside down flag. Always wondered that. But yeah, we're trading in this range. Let's switch to, we're on the daily here. Yeah. I like the 4-hour chart. Let's go 4-hour. Oh, there we go. I want to see this range. Yeah. So we've been trading in this range. We have been range trading really nicely, actually. I pretty much stick to my predictions from the last video and prior videos. We're trading in this range, 28 to 32,000. I don't see a reason for us to reverse and go bull again, just given the global macroeconomic conditions, inflation, war, and the outlook on the economy and a looming recession. So I don't see a reason for us to flip bull, but it is normal to have bounces. So we could, hit a low and then bounce up. So, bounces up, can and probably will happen. But what I predict is we'll probably get another leg down. How much will that be? Could be 50%, could be up to 50%. So where's 50% from here? If we're at 30,000, another 50% down move would be $15,000. Personally, I don't think we would hit $15,000. I predict the next leg down would put us in like the $19,000 to $24,000 range based off what I've seen on the chart and just looking at previous support and resistances. Is there going to be a catalyst for that next leg down like we saw with the whole Luna collapse and everything that did to the market? It's you can't really predict that stuff because that was just like, just like the 2020 virus. You can't predict that stuff. And that just, is like a black swan event. So there could be some event that brings us to the next leg down. But even with bullish news, like we just had the Ethereum merge test net, and Ethereum still is like 1700 and change. And we just had the crypto regulation proposal, which was, pretty much mostly bullish. So even with bullish news coming out, there's still like we haven't even gotten a bounce. It hasn't given us a bounce. So I think we're just going to range in this level until, maybe the next event happens or we just slowly, bleed out. But those are my predictions as of now. It's been my predictions as of recent videos, and I'm holding to it and looking for the next leg down to accumulate more.
Good job, Rob. I think you might, you called that one right. I was way too bullish in the last video. I just want to say a couple more things. What do you guys do? Like, how do you know if we flip bullish? If what are the levels that we're looking at right now? I would say if Bitcoin starts closing candles above 32,000, above this resistance level here, I would change my tune and start becoming more bullish that we're actually bouncing out of here. That this was the support and that we held, because we looked at those other levels or those other areas. I need to zoom out. When in doubt, zoom out. That is too far. Let me quickly go to the daily. What we're talking about is this area right here in the low 30s, 29 to 32,000. That has been historic support. If we start closing candles above 32,000, I'm going to flip and be Mr. Bullish again. However, if we start closing candles below 28,000, I'm going to say run for the hills, because we're probably going to the low 20s. That's kind of where I'm seeing things. I just wanted to show one more thing before we close out this video. I saw this really cool, I guess it's kind of like an indicator called the Puell multiple. I saw this in another YouTube video yesterday or the day before. Never seen this before. Kind of wanted to show you guys what it is. The definition is the mining revenue divided by the yearly moving average divided by the mining revenue again. So it kind of shows you like when the market is extremely like overbought versus oversold. When the Puell multiple is down in this one range, in this green area, that is historically when Bitcoin has bottomed out and started its next bull run. You're talking like back in 2015 here, the Puell multiple was way down here below 1. And I mean, had you bought Bitcoin right there, I believe it was around $200. That's when I I made my big 100 Bitcoin purchase. If you've watched the, the previous videos, I didn't even know what the Pure multiple was, but apparently it was a great time to buy. Again, here,
Intuitively new.
intuitively new. 2019, here during the crash of the virus, Pure multiples way down here below 1. So we're approaching that again here. Does this mean we're going to have one more leg down and get this Pure multiple like way down here below 1? I don't know. It's looking like that's likely because the last time we've kind of hovered around these levels, we get one final push before the market reverses. I kind of just wanted to show the viewers this because this is kind of something cool and new that I learned about today that kind of shows us that we're getting near the end of the bear market. However, there may be a little bit more short-term pain before the market will turn north again. So yeah, I think we can.
One quick thing to add to that, I just want to see what the calculation was again for this. Mining revenue in USD divided by 365-day moving average in mining revenue. Okay. We're not scrolling. Okay, so I've seen this chart before actually, and Nick showed it to me before this video, and my comment was, well, when Bitcoin started in 2011 and now we're in 2022, basically this whole time of crypto's entirety, we have not seen quantitative tightening. We've only seen loose money, loose policy environments, and basically like, you know, extended bull markets and profitable markets. Now we're in a phase that crypto has never seen because it's a relatively new asset class. So this is indicative of the past, but it may not be of the future just due to the market conditions that we're experiencing right now. And then the last thing I will say is I do think everyone wants lower and is expecting lower because who wouldn't want, you know, cheaper prices to buy in at? You know, that's ideal if you're an investor. What I will say is if you think prices are going lower, and let's go back to the chart quick. If you think prices are going lower, 20,000, 15,000, whatever it is, you know, we're way down here. So this is, let's say 19,000 where this clicker is. So if you're expecting that to happen, what do you do? Do you just wait until the market crashes and then you just decide to buy? I don't think that's a good idea. I think if you're expecting that, what you could do is you could start setting buy limit orders. So you can go on the exchange, put money on the exchange and set a limit order to buy Bitcoin, whatever it is, at $19,000. Because if it does go down that low, you may just have one wick down and then say, hey, it's 19,000. And then we just go back to like 22,000.
Yeah, and it could happen when you're sleeping. Like you might be in bed because crypto trades 24/7. That could happen. So I think that's a great idea. Set those limit orders so that you might wake up one morning and, oh, I bought Bitcoin at 19,000.
Right. So it could catch at 19,000 and then it just rips to 22,000. Then we trade in that range, 22 to 24,000, and we never see $19,000 again. And you missed out. So if you do think it's going to go lower and you're looking to get into the market, you can start setting buy limit orders now. So it may catch, it may not catch if it never goes that low, but it's a good way to start planning, especially if we're looking bearish, which we are. So those are my thoughts. I'll wrap it up there unless you have anything else.
No, I just want to say, Rob and I are not financial advisors. It's not financial advice. Do your own research before you make any real financial decisions. And we'll wrap it up there. We'll see you guys next time.
See ya.